All right, good morning, everybody. John Novak handing off the mic. I like it. Man, a lot of great stuff this morning. Is it just me, or is it just absolutely amazing when the CEO of the company comes in and takes the time to share some of the things he knows, some of the things he sees? I think it blows me away every time. Um, and what a passion for teaching that he has. Guys, my name is Mark. For those of you that are brand new, it is cool, isn't it, Sophia? I love it. Welcome to the room. Nice to have you guys here. We're still loading in. People like to kind of shuffle in at their own pace. That's totally cool. Um, let's talk about advantages and patterns today. That's kind of what we're going to do, and you never stop learning. Amen. Guys, I get smarter every day. I try to anyway. And I want to share something real quick. Because sometimes you're going to sit in this room and you're going to have this little mind blowing, oh my gosh, that's a new concept. This is so cool. I'm so excited. Remember, guys, you can flip that switch to simulator, right? Hey, this is a new concept. I'm going to work through it. I'm going to practice it a little bit. It's okay to go from your Apex account, to go from your live account, to go from your Top Step account and practice it on simulator, right? Take a minute. Get comfortable with what you're incorporating. Um, that's a mistake that I've made in the past, so I wanted to share that with you guys. Anytime you have a new concept, practice it a little bit. Go back, use that market replay, right? Do something to make sure that it's you're not misunderstanding a lesson and getting in there. Now they're starting to file in. Good morning, everybody. Welcome to the room. When John says that he's going to go eat breakfast and turn it over, that means he's got about another 18 minutes before he actually exits the room. I love it when he's in teaching mode. Um, love it when he's in teaching mode. You guys don't realize this. You get it once a month. I get it every morning. Every morning. I get the benefits of all his knowledge and I get to pass them on to you guys. So it's pretty cool. Good morning, buenos dias, and all that good stuff, guys. Let's talk about the day. Um, for those of you that are brand new, welcome to the room. For those of you that are getting comfortable with what you're seeing, welcome back to the room. Those of you that have been doing it for a while. Guys, everything that we do is systems and routines. Everything that we do is methodical, mechanical, and it's focused on advantages and focused on patterns. Um, my job and one of the things that I think I do well more often than not is I try to simplify. Try to take a concept and break it down to its bare bones to try and make it easier for you to understand. Um, and then from there, we formulate a plan. So part of my routines every morning is I'm going to forexfactory.com/calendar and I am checking on news. I'm looking to see if there's a news release coming out. If you've ever been caught in news and that freight train of emotion, you know how important that this can be. Today is Wednesday, July 19th, and at 8:30 a.m. there were the housing starts and the building permits. High impact, medium impact. These don't necessarily move the market, but they have the potential to, right? And potential's very big. So if it has the potential to move the market, to make it change directions, to make it trade too fast, to recognize your patterns in a timely fashion, sometimes going and grabbing a cup of coffee or toasting a bagel is your best bet, right? Sit on your hands. Let it clear out. For my crude oil traders at 10:30 a.m., we have our first crude oil inventories since the contract roll. So there's probably some speculators waiting on the sidelines to see what they say to make a move, whether it's to unload some stuff or to buy some more stuff. Either way, that 10:30 a.m. can make crude bounce pretty erratically. So be aware, write a note down. Have Siri remind you at 10:30. Then everything that I talk about comes from the Nexgen education page. We have gone to great lengths to not keep anything from you, to make sure that you understand everything, that you have every tool that you need to be successful. And so everything that I talk about comes from this page. Everything that regarding rules, the looks of the rules, the advantages of the rules, everything comes from this page. And I'm going to share everything that I have for it with you. And I'm going to give you resources to check yourself as you begin to simulate, as you begin to practice these rules. We're going to teach you how to do anything and everything that you need to use. And we have the tutorial section, which are where all those rules are found. We also have the software user guide. If you have NinjaTrader questions, whether it's setting up stops and targets, scaling charts, all that is available for you right here. And we're going to use these tools to keep you guys on the path. And there's a very definite path to becoming a confident trader ASAP. This path really hasn't changed in decades, to be honest with you, or at least since the incorporation of this live trading room, which I imagine is somewhere around 17 or 18 years at this point. And it all begins with posting your trades in class, taking pictures and getting them in the room. You'll notice this morning there's a lot of pictures coming through. There's an awful lot of people posting pictures and receiving feedback. And that's kind of the magic of what happens in this educational room. For 15 hours every week, I'm here and I'm available to give you feedback on anything and everything that you see. The trades that you take, the way you manage them, the advantages that you had, and maybe the disadvantages that showed up in that trade. Every time you post a picture in the class, you're going to get feedback. It's like a private session. You're also going to track your real-time performance in a spreadsheet. So for you guys that have already taken trades today, those trades should be in that spreadsheet that Nexgen provided already. What did you do? How did you take it? How did you feel? What worked for you, right? So you're going to go back every morning and you're going to study what you did yesterday. If I go back and I look at yesterday's trades, what I'm going to find is that when I'm on the right side of things, when I'm trading with the momentum, when I'm trading with direction, when I'm not fighting those small triggers on the NASDAQ, I found a great level of success yesterday. If I decided to maybe fight those small triggers or multiple divergences, that didn't work for me. So I have to wake up this morning and say, all right, this worked out great. It brought me profits. This took away my profits every time, and it's pretty consistent. So I'm going to focus on what worked, and I'm going to try to avoid what didn't work. And I'm going to look at the trades that felt easy, that kept me relaxed, because those are the ones that are typically rules based, that have all the advantages in place. And the ones that feel forced, the ones that make you nervous, the ones that make your heart beat outside of your chest, guys, you're probably breaking rules, or you probably don't understand your rules well enough to trust them yet. And that's okay. Trust comes through that repetition. But a brief historical study each and every morning before you get going, guys, 3 to 5 minutes, looking at what you did yesterday to make you better today. Guys, this is really a recipe for success. And then what we're going to do today, our first hour is dedicated to learning the trigger line and the Fibonacci rules for when it's okay to trade. We're going to spend an hour talking about the rules, the advantages that they provide, where to find them, the looks. And this is going to be your opportunity to ask questions, right? If I talk about something and you don't understand what I'm talking about, I want you to raise your hand. I want you to say, hey, Mark, back it up for a second. Let's look at this. One of the things that I've realized is that being new is difficult for grown-ups, right? Being a student is difficult for people that haven't been a student in a while because you don't want to take up classroom time, right? You've got that etiquette ingrained through the business world. Hey, don't make noise because there's a class going on. Guys, I want you to make as much noise as you can. I want those hands raised, those questions asked, those pictures posted. You can't. You can't take any time that I'm not willing to give, and I'm willing to give all of the time. So we're going to learn these rules this morning for when it's okay to trade. I want you guys simulating, right? Don't wait until you think you're perfect to fire up that simulator. Get in there, use that Monopoly money, and practice these rules as you see them, right? As you believe them to be true, but then take those pictures. Every time you take a trade, take those pictures, and to get the absolute best feedback, write your rules on the chart. Write the rules that you've created, or write the rules that you've gotten in this classroom. Or if you're not sure about the rules, just write what you saw. Hey, Mark, I noticed everything was green and I jumped in right here. What do you think? And we'll talk about the advantages and we'll talk about maybe some challenges that might have been there. And we'll also talk about how to do it better if there's a way to do it better. So you're going to simulate, you're going to post pictures in the classroom until you're sure that you're always taking the correct trades. And that's the idea, is to stay with the correct trades, to stay with the advantages. Don't practice the wrong trades. And I want to say that your rules will provide advantages. We're going to talk about those. So trading with advantages, and it's not about what happens after. It's what happens before you enter the trade. That is where the advantages are determined, right? If the advantages aren't present and something happens that could have proven to be advantageous, then maybe it wasn't your trade. And we're going to simplify. And we're going to focus on the absolute best of the best in the beginning. We're going to talk about a high probability trend trade in this first hour. And this is a trade that typically wins 70 to 80% of the time. This is a trade where every indicator on every chart agrees for the trade. This is a trade that if this is all that you focus on and you stick to the checklist that I'm going to give you, is a trade that when people follow it to the letter, typically wins 70 to 80% of the time. And that's going to be really the plan. That's going to be our simplicity plan. And then we'll branch out from there. And we'll look at other options. Use market replay. If you scrolled through the room today, you'll notice that Safia went back and replayed her day yesterday. She said, let me see if I can see something that maybe I missed the first time around. And that market replay is going to allow you to get twice the repetitions each day. And you're going to fix it. Mistakes that you made, skip trades that you shouldn't have taken, take trades that maybe you should have been in, and take pictures and bring them back to class and let's talk about them. And then you're going to repeat this process every day until you always take the correct trades. And that's the idea. And then once you can take the correct trades, guys, that's where you're going to find yourself wanting to test your plan, wanting to go live, and seeing how you react in a real situation. And that's exactly what we're going to do. But our first focus is going to be that high probability trade. And if you go to the glossary of common terms, it's right here. And it's defined as when each indicator on every chart agrees for the trade, when your triggers are the strongest, when there's nothing between you and your target, no termination conditions exist. And this is the trade that sets the tone for everything in your trading career, because this is the trade that's going to teach you how to read your charts. This is the trade that's going to have you opening up your workspaces, and from your study you're going to understand just by looking at the charts where the market is likely to continue, and you're going to be able to use that continuation point as an entry for that highest probability trend trade. You're going to understand where the market is likely to go. You're going to be able to use momentum and Fibonacci and create an intelligent plan for identifying potential exits. And you're also going to understand where the market is likely to stop, which means that you're going to be able to look at your charts and say, hey, the trend may end right here because of these conditions. I'm not going to take that next trade. I'm not going to hope that this area breaks. I'm simply going to sit on my hands and remain with these advantages. And you're going to be able to do all this on only 2 charts, right? You're going to be able to do all this from your study on the high probability trend trade. And that high probability trend trade is only 3 rules. It's not 3 rules with addendums. It's not 3 rules with ifs, buts, those in there. It's just 3 rules, guys. And these 3 rules provide 3 advantages. The advantage of momentum, the advantage of a clear path, and the advantage of an entry area. And these 3 advantages, when you piece them together, create a trade. These 3 rules happen on only 2 charts. Remember simplicity. Write that down, all caps. Use a Sharpie. Simplicity. 3 rules on 2 charts. And guys, you're going to start on a large chart. You're going to focus on a large chart initially, because your large chart is going to identify the direction of the market. The large chart is going to identify the momentum in the market. The large chart is going to identify the areas that that you need to pay attention to. Your large chart is a broad stroke of a brush, right? It's this overall consensus, the overall opinion of the market. And rules 1 and 2 of 3 have to be met on the large chart before you ever look to your small chart. So by the time you take your eyes off of this large chart, you're already going to have the advantage of momentum, and you're already going to have the advantage of a clear path. And when those are present, we're going to refine that broad stroke of a brush. We're going to take a smaller, faster chart, and on that smaller, faster chart, we're going to pinpoint our area for entry, that point where the market is most likely to continue. And rule number 3 is going to get you in at a very specific spot. Rule number 3 is going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. But the idea is that you let the large chart lead the way, that you let the large chart create the advantages, and then the small chart's only used to get in when those advantages are present. The large chart is the large crowd. It's the deep pockets investors. It's the guys that create the momentum, the guys that react to those Fibonacci areas. And the small chart is that little group of yahoos willing to fight trend, willing to fight momentum, and they're going to get us right back to the best of the best spots. So embrace that 2-chart idea. A lot of you want to add more charts. Well, John Novak uses 7 charts. Well, John Novak's been doing this for 27 years. Well, John Novak takes 38 different trades. And again, John Novak has been doing this for 27 years. So I want you to be who you are today. I want you to allow yourself to be new. And let's focus on these 3 advantages coming together on 2 charts. And let's begin with the first advantage. And that's going to be really just identifying the trend. You have trigger lines on your chart. And trigger lines are 2 parts. Your small trigger lines are going to be the smaller, the narrower, the solid lines. And your large trigger lines are going to be these dashed, these wider lines. One is a fast-moving indicator. The other is a slower-moving average. And these are going to work together. And the first thing they're going to do is they're going to define trend. And it's pretty simple. When the small triggers break above the large triggers, the background paints green. You're in an uptrend. You're only looking for rules to be met for high probability trend trades long. When the small triggers break below the large triggers, it's going to paint the background red. That red background lets you know I'm only looking for high probability trend trades short. Giving yourself the advantage of trading with the trend. It's really the first advantage that you give yourself. And it doesn't have much to do with the rules, those 3 rules. But if the large crowd says we're going up, let's go with the large crowd, right? And if they say we're going down, we're going to go with the large crowd down. But we're going to look for strong triggers. Rule number 1 says that your large chart must have strong trigger lines. In an uptrend, it means that your small triggers are crossed up above the large trigger lines, which are also crossed up, wide and angled in the direction of the trend. It's the space that's created between the small and the large that lets me know that the odds are favorable for the market to continue in the direction of the trend. You're going to hear us say in the room all the time, odds favorable momentum. It's a key phrase because that is what starts the process of looking for that high probability trend trade. And when you have that odds favorable momentum, that is the most favorable look for buying a pullback to Fibonacci support in that uptrend, guys. That smaller, faster chart refinement process finds you an entry typically at the bottom of these tails that you'll see on the large chart. So as we go back and study, every time you see odds favorable momentum and you see one of these tails, there may be an entry for a high probability trend trade. In a downtrend, small triggers below the large triggers are wide, they're angled in the direction of the trend. That space created between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. Guys, what an amazing advantage to have. To enter that pullback to Fibonacci resistance when the odds are favorable for the market to continue down. And you're going to look for your opportunities when that separation is present, because when those small trigger lines begin to work their way back inside of the large trigger lines, we call this a weakening of the large triggers. And when you weaken those large triggers, anything can happen up or down. It becomes more of a crapshoot. You've lost that advantage of momentum. The market may go up, it may go down, you're just not sure. So rule number 1 keeps you focused on the absolute best of the best look. That look that's going to give you a market that's likely to continue, right? And you're going to look for your opportunities in between where that separation begins right up until it ends. And if you see those tails, You know that there was a potential entry. We're going to go back and learn how to study that. Same thing in a downtrend. The separation is present. The tails show up. These are those little refinement processes on a smaller, faster chart. And the market continues down until the triggers return. Those anything can happen triggers typically precede a reversal in the market. There's that anything can happen. Anything can happen and things change direction. But in between those 2 points, odds favorable momentum carries you to that next area. I share this picture every day because Nexgen provides advantages, right? Your rules provide advantages. Your rules keep you from guessing. They keep you from wondering what direction the market's going to go. And if you let rule number 1 lead the way, guys, you're going to recognize that sometimes the larger down and the smaller up, or both triggers are down but the background is green, or vice versa. And this is indecision. These are buyers and sellers fighting it out. These are people that move the market, fighting it out. You never have to get caught in the middle of that. We watched it in NASDAQ yesterday. The NASDAQ consolidated for about an hour and a half. And during that hour and a half, when most traders are getting chewed up trying to predict which way it wants to go, Nexgen users were able to sit on the sidelines to avoid all that confusion, to not have to make predictions. And then once that market began moving again, that's when the rules are met, and that's when we look for that odds favorable momentum, guys. So embrace the idea that rule number 1 is designed to keep you safe. Is everybody comfortable with the concept? All my new users in here, a lot of new faces in here. Rule number 1, guys, that advantage of momentum. It doesn't happen all day, every day. But this is the rule that's going to be easy to recognize. This is crude oil right now. And crude oil's been slow today, but look at this. Odds favorable. And there's one of those tails, and the market continues up. Odds favorable. There's one of those tails. The market continues down. Guys, you have 10 days worth of data loaded up on your computer where you can come through and you can look for these opportunities and create that recognition. Crude oil's moving a little slow this morning because it is crude oil inventories. But if we open up that NASDAQ, you'll see a lot of opportunities where that momentum is advantageous and that market appears to be continuing with that advantageous momentum. So that's rule number 1. Great way to study, and it really sets the tone for everything that you do when you're looking for trades. Once that momentum is in place, guys, you have to make sure that you don't have termination conditions, that you haven't reached an area that may reverse the market, that may stop the market, that may create a bounce that's untradeable. And that's exactly what a termination condition is. It's just a Fibonacci-based indicator that may reverse the market, and it's based on a comparison of that area and the T3 trigger strength and location. The areas that may create a bounce, that may stop the market, here is your map. Red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s, a magenta divergence high, or a cyan divergence low. These are the areas that may stop the market. But in order to determine whether or not they're going to stop the market, you're just going to want to do a simple little 2-step process. The first thing that happens is price reaches an area, meaning in this downtrend, with that momentum, these red Renko bars come down and reach Fibonacci support. Price reaches the area. Guys, let this be ingrained in your brain. The price has to reach the area for it to be considered a termination condition. Otherwise, it's just a target. But when price reaches, you're going to ask yourself, where are the T3 trigger lines? Where are those lines that give me momentum? If they remain above support, whoops, looks like I just got booted out. On my way back. Nobody panic. Here I come. Speaking to you from the great beyond. Almost there. And we're back. There we go, guys. Yeah, when you lose me, my whole screen goes gray. So I see it too. You have me back now, though? Price reached the area, right? The trigger lines remained above. No more short trades into this area, guys. Termination conditions are probably one of the most broken rules because we get excited about wanting to be in a trade that we're willing to forfeit the advantage of a clear path. But if you sit on your hands, if you're a little bit patient, let price react to these areas, it will provide the advantage. So if price reaches an absolutely no trigger lines breakthrough, you no longer have a clear path. Rule number 2 is not in place. Right here, that is a small swing 1-to-1, Rakesh. It has absolutely nothing to do with the lesson right now. But if you go to, let's see if I can open a second one so I don't lose my place. If you go to the glossary of common terms, there's 2 types of 1-to-1s. There are these yellow 1-to-1s. These are the 1-to-1s that work their way into termination conditions, and it's just 100% Fibonacci alternate. And to be honest with you, it's a lot of math that people smarter than me put together to create these, and we'll respect those as termination conditions. The small swing 1-to-1s are when you're going to see those purple dots right here, and it really is a smaller, faster 1-to-1. And to be honest with you, in most instances, it's not going to play into what we do. But there are some traders that like to use them. When they line up with potential entries, it adds a little strength to it. So when we talk about entries, you may see them a little more. But when we talk about termination conditions, we're sticking to those fibs, mid bands, red resistance, blue support, yellow 1-to-1s, and then divergence highs, which is where momentum was lost. If the market pushes up and pushes back down, and there's a loss of momentum, guys, this magenta line will print as the third bar is forming. And the same thing from a low. If the market pushes down and begins to push back up, if there is a loss of momentum, and this is all calculated in the background, it will print right around that third bar, which is why these divergence lows and why this recipe, letting price reach the area first, is so important. Price reaches the area, triggers remain above, no short trades. So the path isn't clear. When is the path clear? Well, the path is clear when your small and your large triggers get to the other side of the area. So if price reaches support and no trigger lines break through, we're going to sit on our hands for a second, right? The area is either going to hold or it's going to break. And we consider it broken when the small triggers and the large triggers get through to the other side. In the beginning, if you let it be really that simple, 2 things, black or white, price reaches, no triggers, no clear path, rules not met, sit on your hands. And at this point, we say, I'm going to wait for both the small and the large triggers to break through. Because now the path is clear and I have odds favorable momentum, and there's one of those tails that pulls right back to support that used to be resistance before it was broken. And guys, that is your simple approach in the beginning. Either let it be broken or let it not be broken. And if you go through some of the examples in the user guide, you're going to see a couple different. And I want to point this one out because I noticed on some charts this morning that this divergence low, this pivot with a loss of momentum, was being referred to as a pivot stop out. And just a little bit about what a pivot stop out is, because we're looking at one right now. When price pushes down and pushes back up, and there's a this divergence low is nothing more than a point in the market where price went down and then up, and this divergence low doesn't print. And I believe it's my... All right, I just unplugged it and replugged it as hard as I could. Does that help? Looks like I'm going to Best Buy tonight. Are we better, guys? Can you hear me at all? Okay. I was like, oh no, I'm totally lost. So let's get back into this pivot stop out lesson, guys. Price comes down, right? And price heads back up. And divergence isn't true. All right, can you hear me? That was the full, very choppy. All right. So I got yeses, I got choppies, Gary's good, Patrick's breaking in and out. I'm checking every connection here, making sure. Hold on. All right, that was every connection's checked. Better, worse, same. It's like the eye doctor. One or two. Good now? All right, I'm gonna go buy a new headphone or see if I can get my Apple stuff. Put gum on the wire again. Cool. That's okay. We'll take as long as we need to get the lesson, right? So everybody give me a Y if you're good. Price comes down, the pivot is formed, it has a loss of momentum, the divergence line is present. This is not a termination condition. Termination conditions are defined when price reaches the area and the trigger lines remain above. So when we talk about a pivot stop out of a divergence low means that while price created this loss of momentum, right? It's not a termination condition until it comes back and reaches it. Because the line isn't formed till all the way up here, it doesn't exist. But when price comes back to the line after it exists, now we have a termination condition. Now it's what we call a pivot stop out of a prior divergence condition. And guys, that's a powerful termination condition. You see it again at the high. Price reaches resistance and no trigger lines break through. That's a termination condition. Textbook. No more long trades. Right about here, we discover that it also lost momentum. And it pushes all the way down to support. And when it reaches support, no trigger lines break through. So there's no short trades and there's no long trades, right? 90% of what you do during the day will be reading your indicators and waiting for those advantages. Well, then price comes back up to two forms of resistance, and that's a great termination condition. All the trigger lines remain below, but here's that magenta line, and this is what creates that pivot stop out of a divergence high. And when this happens and it coincides with Fibonacci resistance, this adds power to the top. This makes it even stronger, more likely that the market is going to reverse. So pivot stop outs require first the pivot with the loss of momentum, and second, the retesting of that pivot. And then price comes all the way down to those one-to-ones. Absolutely no trigger lines break through, no short trades. Hey, good morning, Paul. We are happy as clams. We are clam happy today. Price reaches support. All of your trigger lines remain above, guys. No short trades. You've lost the advantage of a clear path. Look at the bounce that happens, the reaction that happens from Fibonacci. There's a divergence that's forming right behind it, right? Ah, very good. Paul, that should be fun. There's one of those higher divergences, right? This termination creates a full reversal in the market. My smalls and large triggers get above resistance. There's one of those potential entries, the absolute best of the best, guys. It takes a little bit of patience, a little bit of waiting to get the best of the best, but it's always worth it when it happens. Sometimes the market's going to have a clear path. Sometimes the market's going to have a clear path with odds favorable momentum. Guys, I want to talk about one more termination condition. One more termination condition that may reverse the market, but this is one that you're going to see on the small chart first. This is the only time that I'm going to look at a small chart for a termination condition, and it's three divergences in the same price range. It may terminate the trend. Three losses of momentum happening in the same area may terminate the trend. We know there's a loss of momentum because the cyan line prints from the pivot, or the magenta line prints from the pivot. Pay no attention to the negative numbers. The negative numbers are a byproduct of your software running the calculations. One number isn't better than another. One number isn't stronger than another. Focus your attention on the lines printing, and that's how you know there's a loss of momentum. And when it happens 3 times in the same price range, it may terminate the trend. It may reverse the market. You'll see it from highs. You'll see it from lows. When your small triggers get that anything can happen look, and there's 3 divergences, it adds power to the likelihood of a reversal. And then when that third pivot is higher than the lower, or higher than the previous from a low, or lower than the previous from a high, it adds even more power to it. So guys, 3 divergences in the same price range may terminate the trend. 3 divergences as you work on your management plan is also going to help you identify change, maybe when it's time to exit a trade, when you should no longer be hoping for that home run and a base hit is appropriate. 3 in the same location may terminate the trend. Guys, you're going to see it on the small chart first. And that small chart's going to help you identify the change that you don't see on that broad stroke of the brush. The change that maybe you don't recognize in the moment on that big chart. The small chart's going to give it up for you a little bit. And then I want to talk about divergences on the small chart in one more fashion. The same way, if the trigger lines break an area, small and large get to the other side, the area is considered broken. It's in the rear view mirror. We no longer worry about it. Small chart divergences are no different. When your trigger lines break through one of those divergences, it becomes a reset. That divergence is no longer in play. We're no longer worried about it. And I'm going to see if I can find an example. This divergence, as soon as the trigger lines break it, is no longer in play. The same way this support, when the trigger lines break it, is no longer in play. So you may see divergences running up all day, right? You may see divergences going up, going up, going up, going up. If the trigger lines break them on the way down, we're going to take them out of the count. If they break them on the way up, we're going to take it out of the count. Same concept for termination conditions. So I'm going to give you guys a couple great study pictures as you learn these termination conditions. I'm going to give you termination conditions from a high. And the recipe remains the same. I wrote it down on this so that there's no confusion. The first thing that must happen is price reaches the area. It's not the triggers reach the area, right? It's not that we see an area in the distance, but price reaches the area. Here we have one of those pivots with momentum loss. When price reaches it, the trigger lines remain below. Now it's a termination. Price reaches resistance, trigger lines remain below. We now have a termination condition. Price reaches these 1-to-1s. It also reaches resistance. The trigger lines remain below. This divergence line means nothing for that termination condition, and it'll mean nothing until price reaches it. So here's termination conditions from a high. And of course, the other side of the coin, here's a picture of termination conditions for a low. Guys, I'm going to encourage you, save these pictures. Look at them in the morning because you're going to see this happen all day long. Price reaches 1-to-1s. Absolutely none of the trigger lines break through. It's a termination condition. Price reaches support. No trigger lines break through. It's a termination condition. That divergence low is not a termination condition. It's because price reached the line and the triggers remain above. Here's one of those divergence lows, one of those pivots. On its own, it's just a loss of momentum. But when price reaches that divergence low, the trigger lines remain above. Now it's a termination condition. Now it's what we call one of those pivot stop outs. So there's your terminations from a low. There's your terminations from a high. Keep it black and white. No triggers through, it's not broken. Small and large triggers through, you have a clear path. And then guys, your ability to read charts is going to take you to more trades. And it's going to take you to what we call a 50-50 trade because strong triggers break things, guys. These areas can't hold all the time, or the market would just ping between two lines all day long. Sometimes areas break. You can recognize the potential for an area to break when the small triggers get above resistance, but the large triggers remain below. 50% of your trigger lines have made it through, 50% have not. Guys, this becomes an area with the potential to break because of the momentum the trigger lines are giving you. But the area isn't broken yet. It's not a clear path. And because it's not a clear path, we don't consider this look to be a setup for a high probability trend trade when every indicator on every chart agrees. This takes you into the realm of a medium probability trade. And a medium probability trade means that an issue exists. And your first medium probability trade for 99% of you is going to be what we call this 50-50 trade, when 50% of your triggers make it through and 50% don't. And when you have given up the clear path with that 50-50 look, guys, it's really imperative that you don't sacrifice momentum. It's imperative that you don't sacrifice that clear entry area because you've already got a problem in the mix. And these trades are going to be managed assertively. These trades are going to have perfect entries because areas don't always break, even with odds favorable momentum. And you're going to be able to use that smaller chart to identify it. Maybe it's divergences, right? So there's your first look at expanding beyond that chart reading that happens with the high probability trend trade. We'll talk about this trade today because you guys are going to show me an awful lot of pictures. So is everybody comfortable so far? Uh-oh, San Grandbaby. Debbie, I hope that grandbaby feels better. Guys, here's your NASDAQ, and look, it just reached resistance, and absolutely none of the trigger lines broke through. We know this is a termination condition, and we're no longer looking for short trades. There's that odds favorable momentum, everything says up. That's what got us there. Resistance, no triggers, pushes all the way down. Coming directly from support, takes us all the way up. There's some of those tails with odds favorable momentum. You can scroll back on any chart and you can see how amazing Fibonacci is, how accurate Fibonacci can be to help you understand where the market is likely to go, where the market is likely to stop, and then finally, we're going to use those areas as well to recognize where the market is likely to continue. When the rules are met on the large chart, when we have a clear path, right? When we have momentum, let's go define an entry area. And this is really the most amazing part to me, other than those fibs holding to the tick all the time. John's so excited to be with you guys this morning. When the rules are met on the large chart, this is the look on your small chart. On the large chart, we're in an uptrend. On the large chart, we have odds favorable momentum. And on the large chart, we have a clear path. So you're going to turn your head to the right just a little bit and take a look at that smaller, faster chart, that refinement chart. Rule number 3 says that we are going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So we're going to use a limit order. We're literally going to wait for the market to come back to us. And we're going to let it come back to an area inside of favorable large triggers. Your areas can be fibs, they can be mid bands, they can be one-to-ones. But the key is that we're going to use a retracement on the smaller, faster chart, a small bit of down against all of the up. And we're going to use that limit order and we're going to wait for that retracement at areas inside of favorable large triggers. And those areas inside of favorable large triggers, they're going to be surrounded by your large triggers, the smooth triggers on your smaller, faster chart, and your synthetic triggers, those step triggers on the smaller, faster chart. And when these two overlap, when they're one on top of the other, when they're working together, this creates the smallest window of opportunity, the smallest point where the market is likely to continue. And it's this look that's going to allow you to reduce your risk. It's this look that's going to allow you to have the least amount of risk, the smallest window, to get into that trade. So as a brand new user, embrace the idea that favorable large triggers is your advantage. So we're going to use a limit order to buy or sell a pullback to an area inside of favorable large triggers, fibs, mid bands, yellow 1-to-1s. Your pullback begins with a reversal bar. And at the time of the reversal bar, it's a two-step process. You're going to identify your favorable large triggers, and you're going to identify the areas that are falling within them, fibs, mid bands, 1-to-1s. Your job is going to be to activate a limit order, to wait for that market to come back to you right at the top of the window for a long trade. Because of the momentum on the larger chart, we don't necessarily expect it to get to the bottom of the window, but it has the potential to. So limit orders are activated at the top of the window. And if the market pulls back, whoops, I skipped a slide. If the market pulls back to that area of support inside of favorable large triggers, I'm going to take a picture of the picture so that we can mark it up a little bit. The window from the top of the triggers to the bottom of the triggers, right? We're identifying the area where we're looking for areas. From the highest point of support to the smallest point of support, guys, this is the point where the market is likely to continue. This is the point where we're expecting a bounce. And your limit order goes right at the top of that window because of the momentum, because of the clear path. If the market comes down and reaches the top of that window, you're in a trade with momentum, with a clear path, with defining the area of entry. The recipe is complete, right? Every time you enter this trade at the top of the window, I want you to get your brain around the fact that it may go to the bottom of the window. Remember, it's a window of opportunity, and as long as it's within that window, your rules are still met, your advantages are still present. When it works its way outside of the window, if it goes beyond that window of opportunity, you're going to be there with a catcher's mitt, waiting for price, and your protective stop is going to be right there, guys. And anything that wins 70 to 80% of the time, anything that gives that statistical advantage is obligated to lose 20 to 30% of the time. It becomes a cost of doing business. And this is something that terrifies new traders, guys. The idea that you may take a losing trade is difficult for a lot of people to stomach. The idea is that you're taking the correct trade, that the advantages were in place, that the statistical advantage was present. And if it does reach that stop, guys, it's just a cost of doing business. And you're going to learn through study to trust this look, to take this trade every time it sets itself up, because through repetition, you're going to develop trust, and you're going to trust that more often than not, this is your result. Profit target reached, right? Everything comes back to the window. Notice that it goes beyond the top of the window. It comes to Fibonacci support, and then it continues in the direction of momentum, the direction of the trend, the direction where that path was clear, and it did it from that area where the market is likely to continue. Once it begins to move in the direction of the trade, that reversal bar in the opposite direction is printed. You can reduce your risk, guys. By waiting for the pullback, you minimize your risk on this trade. By letting it be inside of those favorable large triggers, you're going to minimize your risk. Because you wait for the pullback, you are maximizing your profit potential. Guys, this is your high probability trend trade. And we're going to do exactly what we did this morning to learn how to study it, to build trust in it. When your large chart has strong triggers, when your large chart has no termination conditions, remember price didn't reach the area, you can go back historically and circle each of those tails. And if those tails line up with an area of support inside of favorable large triggers, guys, you have a high probability trend trade. This is your best of the best look. This is your focus for the first 30 days. To focus on your entry, your best of the best entry at the right spot with the right conditions when all the advantages are in place, because you're learning to read your charts through focusing on this entry. And if you go to the live market, and let's just see what happens if we circle. And NASDAQ is a little kooky sometimes. There's a circle right on the tail. And there's a pullback directly to support inside of favorable large triggers. This is your pattern, guys. It repeats itself every day on every market. All you have to do is learn to trust it. Circle a tail doesn't mean that it's guaranteed to be a trade. This one went right to the top of the triggers, right? Couple divergences on a 50-50. Safia, Gary, this was your lesson from this morning, wasn't it? On that NASDAQ, multiple divergences on a 50-50 trade tell you to sit on your hands. Waiting for it to get to the correct side of the small triggers creates an advantage. And look what this market did once you get to the correct side. NASDAQ has a little bit of its own personality, but that was the lesson that John Novak gave you guys this morning, live in the flesh. So guys, I'm going to ask, is everybody comfortable? High probability trend trade. Let's keep it simple in the beginning. Let's have one focus, one trade, where every indicator on every chart agrees for the trade, giving you the highest chances of success, giving you a statistical advantage each and every time you enter the market. And this is where I'm going to give you some presents, you new people. Here's a trend trade checklist, guys. It's got about 4 or 5 on the... It's got 4 or 5 on there. Print it out, set it on your desktop, grab your favorite crayon, and every time you take a trade, make sure that you're marking yes. Make sure that your rules are met. Begin to police yourself, that the rules are in fact met. And guys, I've never had anybody use this checklist exclusively to the letter, marking yes on everything accurately, and do worse than 70% trades. Most people are 80 to 90, but let's keep it at 70, right? Leave room for mistakes. If you're a visual learner, here's the exact same checklist, and I've liberated pictures from the resource material so that you can identify exactly what each advantage looks like. Windows of opportunities, everything, guys. So as you are learning to study, as you're brand new, go ahead and look at this every morning. Review exactly what it is that you're looking for. And then finally, guys, I'm going to give you a simple plan for consistency. I'm going to drop this one in the room as well. And notice that your simple plan for consistency in big, bold, underlined letters says, never fight the large chart direction. Never fight those large chart triggers. I'm about to drop it in the room right now for you, Patrick. So what I'm going to do is I'm going to take all of those checklists in the trading plan. That's okay. And I just dropped them in the room. So what you can do, let me slide that over so you can see it, is you can either download them or you can click on them and drag them over to your desktop, and you can drop them right on your desktop. And then if you have any challenges with that and you need me to email them, I'm always more than happy to do that. But your simple plan for consistency, guys, this is designed to keep you focused. This is designed to have you looking for the absolute best of the best, learning to take those entries for 30 days, getting in at the right spot with the right advantages, right? Don't fight the large chart direction. Don't fight the large chart momentum. Define your entry spot. Guys, 30 days committed to getting in at the correct spot, because when you get in at the correct spot, it creates a manageable trade. It creates a trade that you can reduce risk. It creates a trade that has the opportunity to make more money. It's mechanical and it's very pragmatic. There are no opinions needed, right? There's no hope that has to go into this trade. Every great trade needs to be managed. Every great entry needs to be managed, guys. And in the beginning, a mechanical management approach is going to be just as advantageous as a mechanical approach for entry. Remember that you are looking to get paid. You're looking to make money, guys. Your entry creates that advantage. Your management is going to allow you to have an opportunity to make money while you learn to read your charts. When you take the perfect entry, your initial stop goes outside of the window of opportunity. And guys, these pictures are in the trading plan that I gave you. And when you take this great entry, there's absolutely nothing for you to do, guys. You're in there, your stop is in place, and you're sitting on your hands and you're waiting to see. Either the market goes up and stops you out, it's one of those rare losers, one of those costs of doing business, or you get a reversal bar. And that reversal bar goes in the direction of the momentum, of the trend, of all those advantages. and you can reduce your risk above that reversal bar. And then once again, you find yourself in a situation where your hands are up, you roll back from your desk, and there's nothing to do. It's either a small loser, which is okay, we're managing risk, or it goes to your first profit target. And your first profit target is at $100. And it's a quick profit target. Because of all those advantages, it becomes pretty easy to hit. And when you reach that first target, there's $100 in your pocket. It's in your bank, right? It's yours. They can't take it from you. You have a dopamine kick. There is confidence coming from the memory of success. And you're moving your stop to break even. You're saying, I have absolutely nothing to risk and I've already been paid on this trade. It's either going to come get you break even, and guys, in the beginning, as you keep this mechanical entry or management approach, you're probably going to get hit break even quite a few times. As you grow with the software, as your education increases, you're going to know when it's appropriate to hold longer. But you're either going to get out break even, you're going to make $100, or it's going to go to your second target, and your second target's only $200. And guys, that's a $300 trade. It'll typically take you 4 to 5 minutes total. $300 in 4 to 5 minutes of your life. $300 with all of those advantages in place. And guys, a $300 trade once a day is a $1,500 week, which translates into a $6,000 month, right? That's a $72,000 year. Whoops, I missed it too. $72,000 year from one high probability trend trade winner a day. It's pretty amazing, right? Turn that into a 10 lot. Start making $500,000 a year on the absolute best trade with mechanical. All right, guys. That's your high probability trend trade. Patrick, were you able to download the checklist? Were you able to get the trading plan, all that? Okay, awesome. That's our first hour. This is what we do every day. Every day we talk about, for the first hour, the exact same thing, right? I talk about termination conditions. I talk about entries. I talk about all of these things that are going to teach you to read your indicators. The second and third hour are when I'm going to start looking at your charts, guys. And this is where I open the field to your questions. Anything that you need a little clarity on, let's talk about it. Let's talk about momentum. Let's talk about entries. Let's talk about termination conditions if that's what you need. What I found when I was a brand new user, and some of you may identify with this, is I would sit in the classroom, and guys, the things that I take for granted, I've been saying the same thing for 3 years, and sometimes I believe that you understand what I'm saying, but you may not, right? It's like Einstein teaching string theory to a bunch of third graders. 90% of what he says is going to seem obvious to him, but I've got to make it obvious to you. So if you need a little clarification, let me know. We'll get you there. But I'm going to take 5 minutes. The market's coming off of a termination condition, and it has divergence, and the trigger lines are up, and the momentum is there, but it's directly into resistance. And see how it came back to that divergence high? Price reaches the line and the triggers remain below. No long trades into this area, guys. We're going to let it break. Or we're going to let the market roll and let it continue down. We don't have any idea what's going to happen yet, but we'll see. I'll be back in 5. When I get back, post your pictures, ask your questions, and we'll start going through those charts that you guys have already posted. And guys, just to let you know, all the stuff that you and John talked about in the first 30, 40 minutes before class got going, if you need me to go over one of those charts, we'll talk about it, but I'm going to leave those lessons where they were. I think John did a good job covering them, and we'll see where you're at. Mike M., did you post everything that you did yesterday or only the winners? Because all I remember is amazing trades from you yesterday. Did you show me the losers? And I ask that because, man, you didn't post anything. Gosh, let's look at them. Let's talk through them if you need help with them. Everybody's reluctant to post losers quite a bit because it's no fun showing your losers in class, guys. Losers, oh, too many crashes, that stinks. Losers are where the education happens, guys. It's like if you've ever been to the gym. You get stronger when you take it to failure, right? You get stronger when you break down your body a little bit, when you have those things that your body can't handle. Losers create strong minds. Losers create recognition. Losers create the opportunity to focus more on what's bringing you winners. So just throwing that out there. I'll be back in just a few minutes, and we'll get into that second hour. Remember, crude oil inventory is at 10:30. Just a little reminder. An hour. I'm excited for it. Um, Sophia, Gary, NASDAQ traders, I want you to listen. This is a big one for you guys trading NASDAQ. Coming from that termination condition, look at the momentum. Smalls above the large are wide. They're angled in the direction of the trend. And that divergence high, right? We're kind of splitting it as we come into it. Divergence prints. And the market pushes all the way back down to that mid-band. Guys, that's a great look for a high probability trend trade, isn't it? Ziba, Safia, Gary, do you see it? Mike, are you trading NASDAQ now? Your large chart looks good. Your large chart's setting up for success, isn't it? Divergence. Then Daryl, don't trade it. NASDAQ should scare you. So, Jose, guys, let's talk about it. Odds favorable, right? Does everybody give me a Y? Safia, Gary, Ziba. Odds favorable momentum. Yes? Triggers are even above here, right? Everything's looking good. Guys, this large chart looks nice. And look where we're coming from. This is a NASDAQ thing, guys. This is a NASDAQ thing. If you're not trading NASDAQ, don't worry about this one. But I do have people trading NASDAQ. Ziba says, because the large triggers haven't made it through this divergence high yet, it's a 50-50, right? Ziba, great recognition. But let's talk about it. Even if it were perfect, 100%. For you NASDAQ traders, guys, I can't be more clear about this. Here's your window of opportunity, right? This is where the market is likely to continue. We get that after the first reversal bar. But then divergence prints, right? So we have a slowdown. But what I want you to pay attention to is look at these small triggers. And look how they are vertical and strong. And guys, this is a NASDAQ thing. You guys that are trading crude, you guys that are trading the ES, this doesn't become detrimental the way it is on NASDAQ. Everything is super, super strong. And look how the price comes off the mid-band, hits those triggers, and continues down. Does everybody see that? On the NASDAQ, guys, if you're fighting the small triggers, you're getting your ass kicked more often than not. Pardon my French. Look what happens when it gets to the business side of those triggers. Look what happens when price closes on the other side of those triggers, right at support, right at this area. Guys, this patience piece in the NASDAQ will pull 10 losers out of your day every day. Don't fight the small triggers, especially when divergence prints. And then for those of you that love to manage a little more aggressively, if you got in at the mid-band and your stop is below the reversal bar, this is your trouble spot, guys. When you reach those small triggers, when you pull back to those small triggers, if you're fighting them, that's my first. Absolutely, D, you should. We're talking about NASDAQ. We're talking about NASDAQ. That's it, D. We're talking only about NASDAQ, and this is a characteristic of NASDAQ because it trades differently than crude. It trades differently than the S&P. The patterns are the same. This is a great lesson. And Daryl, I did a lot of study on this because I kept getting my butt kicked right here. And I finally realized that if I just sit on my hands. Ziba, send me what your plan for stop movement is. Send me what you have written down on a piece of paper, and we'll talk about it. But guys, for you guys trading the NASDAQ, this is just a little safeguard. Don't fight the triggers. Don't overthink it. So if you don't have a plan, Ziba, how do you know what to do? Just saying, throwing that out there. I don't, Tony. And I'm glad that you asked that. Large chart always leads the way, right? Z, or was it D? Large chart always leads the way. Large chart always says odds favorable momentum. Large chart always says clear path. Large chart has me looking for entries. Guys, the only thing that I'm talking about right now, the only thing that I'm talking about right now is entries on the NASDAQ. And entries on the NASDAQ that follow or that fight strong triggers typically push lower, typically push higher. That's it. That's all I'm saying. I don't give trading recommendations, Ziba, but what I do say is that you have to have room to put your stop outside of the window of opportunity, right? Let me give you a very basic plan. So Tony, everybody, the weight goes on the large chart. The large chart leads it. We're only talking about entries. Your entry on the smaller, faster chart on NASDAQ, if it fights these small triggers, very often it pushes down. What don't you see, Jose? Let's go look. They will. So look at this one, Jose. Well, let's go back and not look at the one that we just looked at, right? I'm going to take this circle. 50-50 trade. Are you with me? Guys, is everybody with me? 50-50 trade. Smalls below, large above. Divergence prints, right? Doesn't really make the mid band. You're not getting in at resistance down here. So it doesn't quite make it. A second divergence prints. Does everybody see it? 2 losses of momentum on a 50-50. We're giving up a clear path. We're also giving up momentum. And Jose, just look at the small triggers, nothing else. Prices above, prices above, prices above, prices above. The large chart says down. The large chart says momentum. Price remains above, it remains above, it remains above. And then finally, I get a close on the business side. I get a close on the short side. I get a close below the small triggers. Isn't not trying to jump in against this advantageous? And if it does overrun a little bit, guys, look at where your entry is. It lines up right with the mid-band anyway. It's a patience piece for you NASDAQ traders. It's an opportunity to not get plowed over because you can visually see those small trigger lines are coming up against you. I'm not saying what you should do, guys. What I'm saying is that your advantage goes away if you fight the small triggers. So if this is your trade and the large chart says continuation down, what I'm saying is that your advantage goes up if you let price get to the right side of those triggers. Everything down, everything down, everything down. When it gets to the right side, it pulls right back to that potential short, right? When it's outside of those large triggers, it keeps up. When it closes below it, now it comes down. Guys, don't ask me what you can or can't do. We have to talk about prices. Are your rules met, Safia? Do you have odds favorable momentum? Do you have a clear path? Do you have an area inside of favorable large triggers? If your rules are met, absolutely. Ignored the small triggers and it went up. Would I have taken the trade? So check it out. Is this NASDAQ, Mike? Perfect entry, right? Look how it comes back to the small triggers, creates a little bit of a bounce. I'd have to see the whole condition. But I know that this is a trouble spot because the small triggers are there, resistance is there, second divergence. I don't know if you have a clear path or not, but if you're looking at these divergences and you got in right here, it's a little bit of a difference, right? You're not getting in at the bottom of it, but you're also not fighting against it. And guys, all I'm saying is that NASDAQ entries may have a little different look to them. Is this it? So this is it. Termination creates a full reversal, gives you odds favorable, and here's your pullback. One divergence on a 50-50 creates a challenge, right? You know it creates a challenge. One divergence, you get in. Mike, Safia, you guys are good with the gap theory, right? And guys, this is one of the reasons why we typically teach on crude, why we typically teach on the S&P. They're a little more predictable. They're a little smoother. It's a great place to build a foundation. Then you start to work beyond it. So let's take a look and let's take a picture of the picture. A lot of you, a 50-50 trade with divergence, you're not willing to take that trade. But if you do, you're taking it from the best spot. Two divergences against you on a 50-50. Mike, you're giving up advantages across the board, right? Two divergences print, the area isn't broken. It creates challenges, doesn't it? So when those challenges are present, all I'm saying, guys, is that there's an option for you to make sure that it's not going to drop lower. There's an option for you to make sure that the second divergence doesn't push it into oblivion, that these one-to-ones don't ultimately end up holding, and it's the close on the correct side of the triggers. Does that make sense? Because my plan says don't take a 50-50 with two divergences. It says that's a rough idea and it loses more than it wins. But I can at least give myself a little more of a fighting chance. All right. So let's just do this. You ready? I'm sorry, guys. I don't mean to confuse you. Yeah, and you were already in. So you chose to stay in. Jose. Safia said, so Mark, I can get in at the one-to-ones, right? Safia got a pullback. NASDAQ's giving a million lessons. Odds favorable, clear path. Large chart leads the way, guys. Give me a Y. Jose, give me a Y. Small's below the large are wide. Everything's through. Guys, it's a good look, isn't it? And that's it, D, is you've got to learn how to trade it. And that's what I'm trying to do right now. I'm trying to take those basic concepts of a high probability trend trade, right? So let's start with the foundation that we created. Odds favorable momentum, clear path, large chart always leads the way. We're cool with that, right? One divergence, strong triggers, right? Take the trade. If you want to get in at resistance, that's great. And from resistance, you had all this space. But guys, I want you to see something. Price gets to the other side of the smalls. That's great. Reaches resistance. And there's a lot of space before it gets back to those small triggers. Do you see it? It's manageable. Give me a Y. Safia, Jose. If you take that one and you come all the way back to the small triggers and it bounces off of them, same as Mike's picture, this is your indication, uh-oh, things might be changing. Second divergence, two losses of momentum, and you're still on the wrong side of the large triggers. Some of you are saying, and guys, this is NASDAQ. This is NASDAQ specific. Some of you are saying, well, that's cool. I'm just going to get in at the mid-band because my rules are still met. The path is still clear. Guys, the tendency of NASDAQ is that when these large triggers are strong as all get out, right? It is, isn't it, Mike? And Mike, on crude oil, on the S&P, I would be in at that mid band all day long. And guys, this is what you're doing is you're trading charts with a different personality. You're trading a market that doesn't flow like the S&P. The rules are the same. Odds favorable, no terminations, look for your areas. But there's a little bit of a nuance, guys, and that nuance on the NASDAQ is that if these are strong and divergence has printed, you're going to get your ass kicked more often than not. It's going to bounce right off of those triggers and launch through your stop. That's what I'm saying. Jose, this is what I'm saying. This is a beautiful entry on any market other than the NASDAQ. But two divergences, strong triggers, guys, it's not a winner more often than not. It's a pattern that I did a lot of study on because Johnny Rocket, I was getting my butt kicked every time I took this trade. And I was saying to myself, I had the best look ever. I had the perfect entry. What's different? And it was those small triggers launching up against me that was different. Guys, that's... Jose, does that help a little bit? Go back and look at your NASDAQ trades. Go back and look at your NASDAQ trades and how many perfect trades lost against small, strong triggers. That's what I had to do. I went back through every one of my NASDAQ trades and I said, how many trades lost against those strong, small triggers? And then the flip side of that is what happened if I waited to get to the correct side. It's not implying that the trend is up. It's not saying anything other than. Guys, don't overcomplicate it. All right, Jose, small's below the large, larger wide, they're angled, they're angled in the direction of the trend. Everything says down at this point, yes? Let's blow it up, let's look at it. Reversal bar prints, one divergence, I'm not worried about it. Some of you may have been in with a limit order right here, okay? 15,980. Market comes up and it hits your entry and it heads back down, right? One divergence, we're good, no worries, I like it. And from 80 to 73 and a quarter, guys, you made $100 already if you wanted that $100. And then it comes down and it's on the wrong side of those triggers, but everything's going and there's no reason to have any worries at all. None. And then we get a second higher divergence, right? And it's pushing up. And if you're still in the trade, you're like, oh, that's cool. My stop is above the reversal bar, but the mid band's right there. So I'm going to put it up here where the market shouldn't go. And that divergence prints on this bar right here. And the small triggers come up. No, Ziba. It doesn't. 3 divergences typically move the market. 3 divergences are a termination condition. A higher divergence may mean that we push a little higher, but not reverse it. So let's look at what the look is as we come back to these areas. Now those small triggers are starting to come up, right? And they're starting to come up with strength. And now they're coming up even stronger. And those small triggers have turned against the trade. And I'm thinking, man, I really want to go short here. But look at those small triggers. This is NASDAQ exclusive. And it comes up. And you said, okay, I'm going to get in the market here. And it pulls up and you're still in your window. And you get a reversal bar and you're thinking to yourself, oh, thank God. Now it's going in the direction of the trend. I get a reversal bar, my stop's in place. Look at the strength of the small triggers. The small triggers are coming up. They're vertical. They're against the trade. And the market bounces right off of them. So give me a Y in the room if you see it, guys. You get a couple divergences against the trade. The small triggers are up strong. Guys, they create a bounce. And if you say to yourself, you know what? Because they're coming up strong, I'm going to wait for a close on the right side. And you never get it. And you stay out. There's a divergence, right? Let's see how it reacts off the small triggers. 50-50 trade. There's a divergence. There's your window of opportunity. The market pulls back to the small triggers. It may or may not bounce, right? I'm not in control of that. And of course, this one doesn't. And there it goes, right? Son of a bitch. But we don't trade one individual moment, guys. We trade probabilities. We trade statistics. I know, right, Johnny? We trade what happens more often than it doesn't happen. My study says that when I fight strong triggers against me, it's a trade that I'm willing to miss. That's it. That's all I'm saying. So go back, guys. This is what I want you to do. Because I know that you all use a spreadsheet, right? And you all track your trades. I want you to go to your 50-50 trades on the NASDAQ, and I want to see how many losers you took against strong small triggers. Which one with no divergence? Directly into a termination condition, Jose? Yeah. Price reach resistance, no trigger lines broke through. That's just not my trade. There's no clear path there, Jose. So for me, the entry doesn't matter. Because there is no clear path. There's a second divergence. And guys, you do. It's different. The NASDAQ is different. But I know that it's been introduced to the room, and I know that a lot of you are trying to do it. Guys, it's okay. Simulate on the NASDAQ until you get its nuances. I didn't. I tried to trade it live. And I lost some. A lot. Until I figured out, guys, that fighting these small triggers more often than not works against me. The same way, when I have momentum and a clear path in an entry area, guys, most of the time, 70 to 80% of the time, it works. NASDAQ's been, no, NASDAQ doesn't have a lot of follow through, Jose. Go back and look at the ones that didn't work. And see if those small triggers were against them, and see if it could have created an opportunity for you to be a little patient. That's what I had to do. I had to take a butt kicking for a while and then go back and look and see what the common thread was. And guys, I apologize already for confusing you guys. Odds favorable, 50-50, one divergence, you get in at the area. Right? Odds favorable, 50-50, one divergence, you get in at the area. That's cool. Notice how your small triggers are a full bar away? It has room to get back to them, right? You have room to manage. And then you get a pivot stop out up here. I like that room to the triggers, guys. I don't want that wall right on top of me. Second divergence prints takes an exit. It's beautiful. Let's see if we can do this real quick. Everybody's familiar with the gap theory, right? Price reaches an area, it's likely to pull back to those large triggers, right? When it hits those large triggers, it may go up. Use the same concept for the NASDAQ, guys. If you've got a full bar to get back to those small triggers, it creates a manageable trade. But if it doesn't break through them, you know that it may create a bounce, right? That's it. If it trades into the small triggers, they created a bounce here. Bonk. And there's that 50-50, guys, with two divergences, and it doesn't work. And a third lower divergence. Does everybody see it? Three divergences in the same location pushes the market down. 50-50 trade, if you will. Smalls are through, large are not. There's two divergences. There's strong triggers. Who thought about getting in at the midband? It pulls back. It hits those small triggers. And look how much trouble it has breaking through them. Guys, do you see it live in the moment? It's trying. Look how they stick. Guys, gap theory is in play too. Your large triggers are a full bar away. But look at how it tried to get through those triggers, but it hasn't. Let's just watch this one live and let's see what happens. I'm not coming from a good top. Still no close below. They still haven't been able to break those triggers. It's not coming from a good top. My large triggers are flat. My small triggers are vertical. I've had two divergences against it, right? Look at how sticky that is. You guys all see it live, right? Yeah, flat triggers, Johnny. That's not odds favorable momentum. But we get excited because we see the midband, and guys, there it is. There's that fight. Let's see what happens if we, and I don't think that this is the right trade. But what if I just had a sell stop waiting? I'm going to get a reversal bar on the correct side of the triggers. But it's not a real trade because the large triggers are so far above. But do you see, Jose, did that clear it up a little bit? Do you see how it looks live, guys? Do you see how that NASDAQ looks live? When you think it's time for a short, but maybe it's not the best, and they're vertical. If this market's going to go down, isn't this going to have to close on the correct side of the smalls? It's pulling back to resistance, right? It's pulling back to those large triggers. It's closing that gap. And you're waiting for that close, right? You're waiting for that close on the correct side. If the rules are met, if it's the right trade, now we get to those triggers, right? Now maybe we're like, that's a trouble spot. If divergence prints, I'll exit the trade. If it doesn't, we'll see if this is really going to be a continuation. I will. I'm going to go through all of it. But guys, do you see how that worked? That little patience piece creates a manageable trade. The rules weren't met, but that was kind of the point. Jose, did it help? And look at that, three divergences in the same location. Say sit on your hands. Mike, did it help? Safia, did it help? Ziba, did it help? Rakesh, all criteria not met. So let's go through this one real quick. Guys, I'm glad that helped. This is something, it's a new concept. And I apologize to everybody that's not trading NASDAQ, but I have a lot of you trading it. And I want to look at this. All right, Rakesh, you didn't write any rules on your chart, so it's tough for me, but let's do this. But Ziba, if you don't even have a plan for management, what are you practicing when you replay? See how that works? Rakesh, are you with me? We had a good top, right? We had a termination that creates a full reversal. That's the first thing I look for. Okay. And then Rakesh, we had odds favorable momentum, right? That's rule number one. That's the second thing that I look for. We'll call it OFM so that it's easy. Are you with me so far, Rakesh? Beautiful. Good top, odds favorable momentum. And now, Rakesh, let's take a look. Price reaches support, and none of my trigger lines break through. So what do we have here? We have a termination condition, Rakesh. We've reached an area that may reverse the market. We've reached an area that may stop the market, that may create a big bounce. So Rakesh, rule number 2 wasn't met. And do you know what happened when price reached support? It blew right through your stop. But your stop is also, let's pretend, hypothetically, Rakesh, that this termination condition wasn't here. Your entry is at the bottom of the move, right? Your area inside of favorable large triggers is right here. So do you see how your stop is exactly where an entry should be if there were going to be an entry for a trade? Rule number 3, and this is why, guys, this is why you have to write your rules on a chart. Rule number 3 says sell a pullback at an area inside favorable large triggers. FLT, favorable large triggers. So Rakesh, do you see how this would have been your entry point? But you had two things against you here. You had a termination condition present, and you had an entry that was jumping in right at that termination condition. Does that make sense? And guys, this is why writing rules on the charts is so important, because if you take a second and you verbalize, this is what I see and these are my rules and let me compare it, everything begins to smooth out. So Rakesh, maybe not a short trade into support, but even if support weren't present, this would have given you a fighting chance at an area inside a favorable large condition. Your termination condition is price reaches the area. So when price reached this blue line and your trigger lines didn't break it yet, this is an area that may reverse the market. This is an area that may stop the market in its tracks, that may create a bounce. So this is your opportunity to just kind of sit on your hand, right? This blue line down here, this would be a target. If the rules were met for an entry, that one would be a target because price hasn't reached it yet. So let's go to crude oil real quick and let's see what happened in there. That's S&P. I'm not sure where that short happened. Not sure what time it was when that short happened. Was this from today? 9:30, 76.45. $76.45 is somewhere right in here. I'm trying to line up your look. I believe this was it right here. So Rakesh, do you see how, I love this. Do you see how it pulled right back to that mid-band right there at the triggers? That little patience piece, right? Rule number 3 gives you an advantage. Isn't that amazing? That's that little patience piece that comes into play. And my chart may be a little messed up compared to yours, but odds favorable, coming from a termination, pulls back right to that mid-band, right inside of favorable large triggers, and Rakesh, it doesn't stop until it's time for you to grab your golf clubs and go hit the course because you reached your goal. That was a great picture, guys, and that's how great lessons come to be. And this is why it's so important to me that you guys write on your charts every time. Every time you take a trade, write on your charts. Guys, if you're using a checklist and you're copy-pasting your checklist onto your chart, I was talking to someone yesterday, and I said, what if you typed it out, right? Let's take a week and only type out your rules rather than just dropping a checklist on it. For you guys with Snagit, because how often do I see you guys take a checklist and just go, yep, 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 yep. Oh man, I lost and it was the perfect trade. When the reality is that one was a no, right? That this one was a no. But if you take the time to write it out, you actually have to study your chart. You actually have to look at it. You actually have to make sure that you were in fact following those rules. So maybe give it a try. See if it works for you. The person that I talked to is my guinea pig right now. And I asked her, I said, do me a favor. Just write it out. I asked him, I said, hey, just write it out and let's see what happens. Let's see if you get a little more clarity from it, right? Small's outside the large are up, the path is clear. Let's see if divergence prints. So guys, I'm going to scroll to the top. Man, talk about getting on a tangent, right? Let's look at some pictures. Let's look at some of your charts, guys. And thank you for your patience as we go through the NASDAQ. And we'll talk about NASDAQ all day long, okay? And we will talk about crude oil. And all I'm saying is the patterns work on every chart. The ideas are the same. And Derek, man, absolutely, you nailed it. Termination creates a full reversal. Full reversal gives odds favorable. There's that pullback directly to support inside of favorable large triggers for the winner. Derek, great, great, great looking trade. Absolutely perfect. Guys, the patterns are the same. Notice this is gold. Derek loves his gold. The patterns are the same. The only difference is that little nuance that NASDAQ creates. Paying attention to your divergences a little closer. Paying attention. Whoops, it just kicked me out. Sorry, I'll be right back. I'll be right back. And for you guys that send me messages during class, I'm going to apologize. I don't answer them during class. I don't have time to go back and forth and take a look. I can't multitask that well. I will answer you after class, I promise. All right, guys, we're back. Show in the chat. You can see my chart. Absolutely beautiful, Derek. Couldn't have done that any better. Great trade. Every advantage. Perfect entry. Beautiful. And I'm going to scroll back up. And let's get to the next one. A lot of pictures. Sorry. And guys, if I miss one, let me know. I'm trying to avoid the 90 minutes of John Novak. All right, so here we go. Joel. Termination creates a full reversal. Full reversal creates odds favorable momentum. The smalls barely eke through, right? One divergence on an area that hasn't broken creates a potential problem. Two divergences makes it worse. Three divergences says get the hell out of that trade. And here's your 50-50, right? No divergence on the 5-1. You checked no, but you took it anyway. Your checklist says divergence, no trade, but you took it anyway. Guys, the path is easy, right? The hard part is following your rules. You wrote your rules right out on the chart, but you chose to break them anyway. This is tough, guys. One of the hardest things you'll ever do as a trader is absolutely nothing. One of the most difficult tasks for a trader is to do nothing when there's nothing to do. When the statistical advantage isn't present, you sit on your hands and you wait for it to be. Advantages happen before the trade. When those advantages are stripped before the trade, guys, you got to just sit on your hands and say, okay, not my trade. Alan, everything says up, right? Odds favorable from a termination, clear path, perfect entry, quick profits, and it gets you break even. Alan, it's a beautiful trade, right? Perfect entry. You take that $100 and you go to break even because that's what your plan says. I think that's a wonderful trade. I think you managed it perfect according to your management plan. And I think that you just kind of have to be okay with $100 on this one, right? Alan, I hope you're listening, but you did that one perfect. Your entry is perfect. Your management is consistent. Your plan is in place. And you followed it to the letter. Nicely done. Gary, 3-chart approach, termination condition, right? Nothing to do. Beautiful. Respect those termination conditions. There's the large chart. I never had to go beyond it. Never had to. I love that look. That was Alan's long. Price reaches. There's no reason. Guys, I'm not smart enough to divide my attention all over the place. I hate to admit it, but I'm not. So if my large chart says no, why? I'm not even going to continue to read the other charts. Not a 50-50 look because the smalls didn't break the area, right? Still an area likely to stop the market. 3 divergences in the same price range. So many reasons to not look for the long. Gary, great job, great read. Run. Momentum is down. The divergence prints. Everything says down, and I don't know what you did there, my friend. Price did not completely clear the triggers. It didn't hit the fib. Price likely to bounce back to the large triggers. Took a shot, worked out. And this is crude oil, but Ron, you waited for the close on the correct side of the smalls to get back up to the problem spot. Ron, that's out of character for you. I like it, though. I think you did it. Large triggers don't follow. Support is reached. Mid-band's reached. You wait for it to slow down and take the retracement back. That's some chart trading, right? That's some chart reading. You are having a pirate day. You have damned the torpedoes. Nice trade, though. Beautiful chart read. Great patient execution. Guys, your chart reading is going to take you to the next level. Your chart reading is going to take you to trades that you never imagined you would take today. Gary, odds favorable. Everything says up, right? This is that NASDAQ trade. Check it out, guys. Everything says up, but it's 50-50. Divergence prints. Small triggers against it at the mid-band. You've got those triggers coming down. And if you wait for the close on the correct side, I'll be damned, it's a winner. That's today's lesson on the NASDAQ, isn't it? Nice look. I have to ask, though, if everything is yes, why no trade? Right? If everything is a yes on your chart, if everything on this giant checklist is a yes, why didn't you enter the trade? That's what you have to ask yourself. And guys, what Ron's talking about is that when price accelerates away from those large triggers, it typically snaps back. That's how Ron made the decision to get into this trade, because price accelerated a full bar away from those large triggers and smacked right into Fibonacci support, and he just closed the gap. Paul, anything can happen, triggers. Anything can happen, triggers. And you're saying, nothing to do, just wait. I don't have the advantage of momentum. I'm going to kick back for a second. Paul, I love the read. Great patience, guys. The market is like a bus, right? If you miss one, it's going to come back. You're going to get it. It's okay. The last trade you saw, chances are, it's not going to be the last trade you ever see again. So Gary, there's a 50-50. Divergence prints. You take it at the area. Second divergence prints. You stay in the trade because of the momentum, because of the speed. And you get paid on the way up. Nice trade, Gary. I believe that's the same one Mike took. It's NASDAQ. Look how it bounced off the small triggers, guys. And push lower. You have to be ready for that. John Novak took the trade, and when it hit those small triggers, he said, you know what? I'm not messing with it. And then he waited for the close on the correct side with everything up and made money on the way up. John Novak, beautiful execution. Waited for the smalls to roll and a little stab back. Man, that is solid. And then John's showing you one of those trades that you're going to work yourself into, guys. When a termination, triggers roll. This is a HVA trade. This is when you add in that next chart. That's a good looking short. And then Mike, there's that exact same trade. We looked at it earlier. That's the same one John took, right? 50-50. John took the exact same entry as you. 100%. But because he's been studying that NASDAQ look as well, he made some quick money, right? Didn't risk it because it may push against. And then he just waited to get to the correct side, let everything roll. Exact same trade, just a little different execution. Nicely done. All right, Jonathan, let's see what you got. So Jonathan, anything can happen triggers, right? Weekend triggers. Oh, that's up here. Right here, we're trading into a termination. Price reached that fib, but everything says up, momentum is up, no divergence on the small chart, so you say, I'll take a shot. And when it comes up and loses momentum, you exit. Jonathan, I think that's nice execution. Not high probability because of the fib, but beautiful execution. Taking those medium probability trades, guys. Taking trades where an issue exists and then being willing to manage it assertively. Let's see. We just had Jonathan's. A lot of pictures today, guys. I love it. All right, Rakesh, let's take a look at it. Both backgrounds are red, smalls below the large, wide gap on the triggers. Got it. So Rakesh, the only thing, and this is the second time, rule number 3 takes you to the area of resistance inside of favorable large triggers instead of jumping in at the bottom. Do you see it? So now we're 2 for 2. And this is one of the great things about this class is, Rakesh, now we've identified your pattern. Your ability to read the large chart is amazing. You're great with momentum. You're awesome with direction. You're great at taking all these advantages. And now all we have to do is get you to take a giant deep breath and wait for that retracement to the area inside of favorable large triggers. Does that make sense, Rakesh? Rule number 3. Notice that's the one that you didn't write on the chart. So now let's focus on rule number 3. Let's focus on using a limit order to buy or sell a pullback. Ziba, click on the arrow in the upper right-hand corner. If your chart seems frozen, click the arrow. You're probably not on the most current bar. Then I'm not sure. Make sure you're connected. Your large chart's moving, but your small isn't. Show me a picture of your chart. Maybe I can see something. Rakesh, great job. We're going to focus on rule number 3. That's your focus right now. Because everything else is spot on exactly where it needs to be, and you are killing the chart read game. We're just going to get you into those great entries so that you can reduce risk, so that you can maximize profit potential. And then Ziba, you saw these two divergences and you thought the market would go down, especially after the second lower divergence. You were waiting for the best moment to go short right at the mid band, and the triggers rolled, so you didn't get in the trade. So you got the second lower divergence. I can't see what's happening on your entry chart. Get out of the way, Zoom. Trying to see if I can see it. You knew the price didn't reach. It has to go up to resistance, finish the business, but those two divergences made you not take it. But you actually had the opportunity. What should I consider more? The divergence or finishing the business? So, all right, Ziba, are you with me on this one? Let me see if I can. Your charts are so small. You show me so much information. Ziba, you can spread these out, make them much easier to read. But let's do this. Are you ready? These lines are problematic until they're broken, right? Until the small and the large get beyond them, then the area is broken. You're comfortable with that, right? You're good at that. So that's exactly what happened, and you had odds favorable momentum, and you had absolutely no termination conditions, and you had a pullback to the area of support inside of favorable large triggers. So Ziba, there's nothing to consider more. What you're doing is you're considering too much. Is you're giving credit. This is a termination condition until it breaks. You broke them, right? You broke them. The same way, Ziba, when you broke this resistance down here, it's not resistance anymore. The area has broken, the path is cleared. You cleared the path. You got the small and the large triggers to the other side of it. 100% textbook, straight out of the lesson. If this red line was your divergence high, both the small and the large got above it, and that gave you the clear path. And when you had that clear path, you had odds favorable momentum, which means that you're looking over here to the smaller, faster chart for the pullback inside. Do you see how you cleared that? You cleared it. You had a clear path. Does that make sense? Does that make that a little easier? You spent a little too much time in your rear view mirror on that one. That's a great question. I mean, guys, these are the kind of questions that will change your trading in a day. Great job on that, Ziba. Thank you for asking it, because I bet you there's a couple other people in here going, oh, that makes sense. You have the issue, you didn't enter the market, but it shows that you entered twice and lost. I don't know, Ziba. Was it an old order in there? Then I don't know. I would call Ninja Trader and say, hey, what happened? I don't have enough information to give you any sort of answer on this one. The market was entered. I would call them now. Don't worry about class. Go, guys, at 8:47. Tell me, what was the execution method for entry? Was it a limit? Was it a buy now? Was it a sell now? Was it closed? Was it canceled? Right? Had my limit orders in place, and it shows me that, right? Stop hit, canceled it, canceled it, canceled it. The stop was here and it was filled. The stop was here and it was filled, right? So you can go through, you can show me your execution log, and let's see if there was a limit order that was there that maybe you didn't realize. Let's see where we're at. So look at your execution log, Ziba. You can take a picture and we can take a picture and look at it and see. All right, Paul, HVA trade. Termination, multiple divergences, small triggers roll, large triggers roll, looking for the pullback to the high volume area. Looks good, Paul. How did it turn out? Is this it? Oh my gosh, rules-based trade. Nicely done. You even got the signal. And you're out. And look at that lower divergence. Isn't that beautiful? Guys, this is what we call an HVA trade. Looks like you got in with the signal because it didn't make it to the area. Quick profits. Paul, beautiful execution. Very nice execution. All right, Gary. Termination creates a full reversal, given odds favorable. Gary, I don't know what you're doing here. 1985, 1985. Trading into walls of supports. I'm not sure what that one was. I'm glad that it was on simulator. Same trade. And then we've got 40 minutes of confusion where you guys are on NASDAQ, sorry. And then Ziba, there's that 50-50 trade with only one divergence. Pull back to the area. Small triggers are a full bar away. And Ziba, that becomes your management, or I'm sorry, Safia, that becomes your management point, right? I'm getting there. Sorry, guys. I'm looking with one eye at one screen and I'm looking at the other on the other screen. So Safia, we talked about this one, right? It's a 50-50 with one divergence. Triggers are out. You take the best entry. And now you guys know that these small triggers down may become a management opportunity, right? No reason to keep extraordinary risk on it. So we talked about that, using that NASDAQ, recognizing those small triggers. And then Jose trades. Go back on the week and let me know what you find when we talk about those NASDAQ trades. Gary, odds favorable, no terms, great entry. No reason for a stop at all. And then you got in with the confirmation after. Take it off, beautiful. Market pulls back to support inside of favorable large triggers. At this point, you're trading that 50-50, one divergence, rock star. Second divergence exit. Gary, nice execution. And then Rakesh, we already talked about this one. Great job posting pictures today, guys. Great job posting pictures today. All right, so Jose, let's talk about a couple things that went wrong on this one. And I think this really works into that lesson that we talked about with the NASDAQ. But before we talk about anything at all on this one, let's let the large chart lead the way. Are you with me, Jose Trades? Cool. Let's let the large chart lead the way, and let's just go through it. Let's walk through it verbally. The trend is down. We know that because the background's red, right? And then, Jose, the small triggers are below the large triggers. And guys, I want to give you a visual. And Jose, this is for you as well. I want to give you guys a visual of odds favorable momentum. And this is the first thing that stands out to me on this trade. Is that your large triggers are flat as a pancake. Odds favorable means that they're both crossed up, that they're both wide in the angle and the direction of the trend. And especially, Jose, if we're talking about a 50-50 trade, I need odds favorable momentum to even think that this area may break. So that's the first thing that I'm kind of looking at. If we were coming from a termination condition, this may be the very beginning of it, right? But we have two areas that the large triggers are above. They're flat as a pancake. The smalls are coming through pretty quick, which I like. That's a good looking momentum. But Jose, there's one other thing happening here. Did you recognize it after the fact? Here's your gap theory, right? Price accelerates away from the large triggers. It's already hit the midband and resistance. And those large triggers just absolutely, they don't follow. So we're looking at that gap theory. We're looking at that idea that when price accelerates away from the large triggers, they remain a full bar away. They're likely to close that gap. And that's exactly what we have going on in this particular picture. Is we've got a huge gap back to the large triggers, two areas that aren't broken, and then we have multiple divergences. We have two divergences in the same location. So we're really kind of throwing away a lot of advantages here. And then, Jose, this is where that lesson comes into play. Two divergences on a good-looking 50-50 can be detrimental, right? Two divergences on a good-looking 50-50 with strong small triggers on the NASDAQ becomes even more detrimental. And this is where that lesson comes in a little bit. But I think that even without that small trigger lesson, your large chart just wasn't really giving you a lot there. Two areas weren't broken. It wasn't coming from a good top. Your large triggers were flat. They're a full bar away. Do you see how all those kind of compound? Does that make sense? And what happens, guys, is in the moment, you don't see it. Why? Because you want to go short. Yeah. And I know this because I've done it, because in the moment, I want to go short. 50-50 trade with divergence. It goes right to the area. Another divergence, a third divergence, and it pushes all the way down. And then when everything rolls, maybe an opportunity for continuation up. Do you see the patience piece, guys? Whoops. This is a great example. 50-50, three divergences, management opportunity. Everything rolls. The trigger lines break the divergences. And then you only have one divergence. And it pulls right back to the area support with every trigger line up and those small triggers forever away. And it finishes the move. The key is to eliminate the nonsense here. It's not perfect, is it, Ziba? But the idea on this one is that this wasn't a perfect setup, was it? Because we had support, or we had resistance, we had one-to-ones, and the large triggers remained below all of them. But when everything rolls and everything agrees, it gives you an opportunity to take advantage. That's all right. You can avoid them. Jose, I hope that helped a little bit on yours. And then Ron hit his goal, so he says, you know what? Let's use momentum and a clear path. Get in, get out, make that money. Guys, Ron's plan is a good one, and it all revolves around having a clear path and odds favorable momentum. And it looks like Tony, we may have to start calling this the Tony trade too. Perfect execution, Tony. Exact same trade. Odds favorable, areas clear. Tony, yours is a little bit different because you don't quite have odds favorable momentum. You have anything can happen. And I know that Ron's rule says that the back of the bar clears the area. Yours says when everything is down and supported, let's make some money. Beautiful trade. Great execution, consistent execution. Then Paul, strong trending market, mid-band doesn't hold, right at termination. Weak triggers at a termination, right? No reason to believe that mid-band's going to hold, especially with a divergence against it. Let's see where we're at. I think we're getting down to the bottom of the pictures. And then Paul, everything's rocketing up. You have odds favorable, you have a clear path, you have no divergence, and you take a perfect entry. Paul, you have really found your stride, my friend. And then Jose, everything says down, right? You take the entry. Nice exit. I like it. You're giving it a shot, Jose. The challenge with this one is your large triggers are still above, which is good, which is why I like how you take the quick shot and don't worry about it. And then you get split triggers, right? And then once again, Jose, there's that gap theory. You've come all the way down, the large triggers don't follow, divergence prints, and it closes the gap right up to them. That's 2 on the gap theory so far today. This may be something that you want to be aware of. Make sure that gap trade isn't. Make sure those large triggers are wide. Make sure you're coming from a good top. And then Sophia, termination, creates a full reversal. Full reversal gives odds favorable. Odds favorable creates one of those 50-50 trades. One divergence and strong triggers, you take it at the area. You take quick profits at the trouble spot, the area that hasn't broken. And then it looks like it gets you break even. Quick profits at the trouble spot, go break even. Beautiful, great management. How do you feel about that one? That's textbook. It's not all because of me. It's because you're an amazing student and because you wrote out a plan and you practiced your plan. And now it's paying dividends. Beautiful, beautiful, beautiful. Jose, what's my read on price and the small triggers? Let's see. So there's that 50-50, right? And Jose, that's a proper 50-50. Wouldn't you agree? That is strong triggers. That is everything up. That's crazy strong. There's only one divergence, right? So Jose, one divergence. We like it. Price pulls back to support inside of favorable large triggers. See how there's room? How there's a whole bar's worth of room to get back to those smalls, Jose. On NASDAQ, that's a great look to take it at the area. And your trade was supported by the HVA line. Every trigger's up. Smalls are well outside. Everything is beautiful. Jose, I love this look. Because the small triggers are still kind of flat, and because they're so far away, Jose, does that make sense? You're not fighting them. You're in so far below them that there's room. There's so much room to come back before they ever get hit. Jose, does that make sense? Is it clearing up a little bit? And remember, it's okay. Simulate it. And that's what you're doing. And man, keep asking those questions, Jose, because I'm telling you, this one little thing has absolutely changed my trading on the NASDAQ. And then John caught that long that we talked about, and that's a nice runner, isn't it? 22 points. Beautiful. Safia, you met your goal plus? I just saw that. Congratulations. Beautiful. Oh, my babies are growing up. And then John said it. Thanks for participating in your own future. Thank you for taking the time to post your pictures, to ask your questions, to seek clarity. Safia, can I ask you, and this is a loaded question, and I'm totally leading the witness here, did simplifying make it easier? Did stop looking for everything and only catching the best? It made it easier, didn't it? It takes the pressure. Guys, look at what Safia just said. Simplicity is the key. And that's your day. Holy smokes. That's not a bad day. 1, 2, 3, 4. We'll call that 5, about $5,700. It's about $5,700. That's not a bad morning, is it? And then John adds, those of you that are not posting and asking questions, either you get it and you're making money or you're shy. Don't be shy. Get paid. Safia, keep it consistent. Beautiful job. All right, Paul. 8 days profitable. Beautiful, Paul. So, Paul, I'm going to ask you the same question. Is simplicity better? Is being picky? Is waiting for the advantages? Is it better? Safia says it is, and she made $5,000 today. You say it is. You're up $6,000 in your funded account. Guys, I'm telling you, there's a path. There's a plan. Keep it simple. All right, 1, that's all I can see of your name. So 1, maybe some help on execution. You read the charts like your backhand, but you're canceling the orders and not placing. Last ones are long. So here's what I need. 1, are you with me? Can you hear me? And then 1, that's all I can see of your name. I don't know if there's more to it than just the 1 and dot, 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 dot. Are you still in here? Okay, there you go. Oh, 10K, cool. So 10K, you know what I'm going to ask for, right? Don't make me go back and search the market that I'm not even sure what you're trading. Show me a picture of what you're talking about, and let's talk about it. Guys, if you post in the room and you say, hey, Mark, I took a trade at 1,000. I don't know what market you're trading. I don't know what the conditions were. So show me the picture, 10K, and let's look at it. Will you do that for me? There's very little that I can't fix. And 10K, this is a great example. People get comfortable and they get excited and they go off and they try and do it on themselves. Guys, if you stop attending class and you find yourself running into problems, come back to class, please. Please come back to class. Let me open up NASDAQ. 05 and 09. So you were in... You were in right there, right? 10K? Okay. So let's look at it. Market set up, right? It's coming right off of support. The small triggers are returning. So we're looking. And you're thinking, man, you know what? Everything says up. The path is clear. My momentum isn't the absolute best, right? But everything says up. Every trigger is up. The advantages are present. And you get in right there at 05, right at the midband inside of favorable large triggers. Am I reading it? Am I going through where your brain was on this trade so far? And once you're in, there's your stop, right? And that's all. And where do you suppose this market is going? Up to 18? That's a pretty reasonable. So from entry, why? What if there's a fib at 28 ticks, 10 km? Are you just going to ignore Fibonacci because 40 ticks is your goal? You paid good money for these fibs. These fibs can bounce the market. They can stop it cold in its tracks, right? Especially with weak triggers. If you get in at 05 and you get out at 18, that's 13 points, right? What's 13 points? That's $260. On a 2 lot, that's $520. So you're telling me that it's more important for you to get to 40 ticks than it is to respect Fibonacci. Guys, numbers were created by men to measure things and to weigh things. Fibonacci is a reflection of the fear and greed in the market. And 10K, so that's okay. So go back and take that picture, right? It's not a glitch at all. It's greed. You had a G word right, but it's greed. Price reaches fibs, weak triggers. Why not get paid and wait for it to break and look for re-entry? Do you know what the problem is, 10K? I can tell you right now because everybody does it. Because you see this happen. You see weak triggers at a fib. You see that it bounces, right? And you say to yourself, man, I hope it goes up more so I make more money. But the problem is more often than not, this weak triggers at the fibs gives you a bounce that pulls you right out. I don't know about you guys. I'm in this to get paid. And let's look at it another way. 10K, if you take that $520, right? And you do that one trade once a day for the week, that's a $10,000 month. 10K, what you have to do is you have to embrace the same advantages, the same areas that get you into these trades. You have to believe that becomes, you knew where the market was going. You knew exactly where it was likely to go. And if your triggers look like this going into the area, 10K, all day long, I can support holding through the area. But if the triggers are weak, the line is reached, doesn't it make sense to get paid and wait for the next one? Steven, you have to move your stop to break even. It won't do it automatically for you. So 10K, does that help a little bit? Use Fibonacci, man. You're great at reading them. I've seen you in this classroom enough. You're great at reading. So maybe as your emotions take over, go a little more pragmatic on your exits, right? It's hard. Would you be mad about $500 in 3 minutes of your life? I wouldn't. That's a pretty good 3 minutes, guys. But what it does for me, 10K, is if I start saying to myself, it doesn't have to be a home run every time. 3 base hits or 4 base hits is a home run, right? Collect the money. Your read was perfect. Everything was right. Everything was in the right direction. Everything said go. You just got to work through that greed a little bit. Look, guys, 50-50 trade. 2 divergences. Strong triggers. It blows up right past the midband. Once again, how many times are we going to see this until you start to believe it? Great stuff. Great stuff. And then Gary, price it resistance, no trade, absolutely. And then Gary, 50-50 trade with divergence, no trade without a signal. I like it. Stick to your plan, right? Paul, everything says up. Man, sometimes that blocks it. It's a 50-50 trade with divergence. You say you'll take it lower or no trade. I like it, Paul. Stick to your plan. Steven, I'm not sure. I've never used the auto break even. I don't have any experience with it, I'm afraid. Maybe drop that into the traders chat and see if somebody over there has a little more information for you. I've never used it, so I don't know. I'm sorry about that. Maybe someone in here has an idea. And then who is this? Derek? 50-50 with divergence, right? You said that you lost? Derek, are you with me? All right, so Derek, I see that you had this checklist up, right? So let's talk about it. This checklist has 2 trades. It has the high probability clear path, nothing in the way trade, right? And it also has the 50-50 trade. So there are 2 different checklists for 2 different trades. What you had here was a 50-50 trade. You had a trade where the large triggers hadn't yet broken the area. Oh, you definitely did not learn it from me. Steven, I've never used an auto break even in my life. I wouldn't even know where to begin. Sorry. All right, Derek. 50-50 trade, right? Are you comfortable with that idea? Okay. So your checklist down here has some pretty good information. It says that if there's divergence, don't take a trade. One of the keys on that checklist is no divergence on the 5-1. So when you're talking about that 50-50, here it says no divergence on the 5-1. And then check it out, Derek. It also says underline, divergence, no trade. And then one more time, if divergence prints, exit trade. So for new user, I went to pretty extreme lengths to try and let you know that the advantages go away when divergence prints. So what you did on that trade, and it's okay. Yep, both of the legs have to be through. Both. So for an area to be breaking, that's okay. And guys, I see all your questions. I'm going to get to them in order, I promise. So Derek, let's embrace this one. The large have to all the way clear the same way that the small do. And that's okay. So now we just got a great lesson from a picture, right? So let both legs of that, I like that you call them legs. I kind of like that. Let both legs get to the other side of resistance, and then it'll begin to behave as support. Great picture, man, and that worked out awesome. That turned into a good lesson, I think. And then 10K, trading the NASDAQ, right? Weak triggers, one divergence, second divergence, small triggers absolutely railing up. If you wait for the close on the correct side, it goes right to the trouble spot. Nice job. No reason not to get paid right there, right? Nice job. Nice job today, Joel. And then Paul, there's that 50-50 with divergence. Just didn't work out. You and Derek took the exact same trade. And Jose, you said that you've been struggling with entries on NASDAQ, but you think the triggered look can help you. Jose, I do too. That's why we talked about it so much. I really think that that helps a lot on the NASDAQ. All right, Ziba, termination condition, creates the reversal, odds favorable momentum, one divergence prints, doesn't make it to the area, and now two divergence prints, and you don't get in at the area, you get in way below the area, and those small triggers are up. So Ziba, this is what we talked about all morning for an hour. Two divergences and the small triggers up, you have to be patient, you have to wait. Rakesh, are you talking about NASDAQ? $24 ticks is a pretty good, so the money is different. So on crude oil, 12 ticks is $120, right? It gives you room to relax. It gives you room to put the stop in the right place. And remember, Rakesh, that the stop goes outside of the window of opportunity where the market shouldn't go. So while that's great while 12 ticks is great on crude, the exact same monetary value on the NASDAQ is 24 ticks. And that 24 ticks gives you room to react as well. And it's the same money, it's just more ticks because it's got a bigger move to it. Does that make sense? So a lot of people, they'll do 24 ticks as their initial stop. Whoops. And then $100 is 5 points, which is 20 ticks for $100 on NASDAQ, and it's 40 ticks for $200 on NASDAQ. So to put that in one line, 24 stop, 20, 40 targets is a great place to start on the NASDAQ if that's the approach that you're taking. But because the NASDAQ moves so erratically, sometimes bigger targets are in order because it loves to hit those extra targets. So Ziba, you had odds favorable momentum, yes? Love it. One divergence, no big deal, strong triggers, odds favorable, everything says up, beautiful. And it doesn't make it back to the mid-band, right? Not quite. So you didn't enter the trade. I love it. Great job, Ziba. And then the market comes down, and it gives you that second divergence. And so let's talk about entries. Ziba, do your rules say that you'll take an entry in an area inside of favorable large triggers? That's up here, which is cool. You're in a little low, right? But what happens is a little bit of patience, waiting for the area rather than getting in so low because you're afraid it's going without you. This is the lesson that we talked about today, those small triggers railing up against it. Two divergences and strong small triggers, you have to be patient because it's probably going to push up higher. Does that make sense? So let's do this one. With two divergences and small triggers against, it's okay to wait for it to push higher because it often does. And I think that's great. And then I think you handled it beautifully, right? So you got in where you got in, that's great, but then you recognize the small triggers and you said, wait a minute, that's two divergences and small triggers. I love it. And then if you took the close below, that third divergence said, okay, this one's not going to work anyway, right? I think you did it just fine, Ziba. But if you wait for those areas by then, you could have kept yourself out of a little bit of heartache. Nice job. You guys are killing it today. Great work, everybody. 50-50, one divergence. What does that mean? Is it tradable? Gary, what do your rules say? Do your rules say 50-50 with divergence, market flow signal at the area, take the trade? Then is it tradable? Per your plan? Absolutely it is. That is the confirmation at the area with the rules met, without a doubt. Perfect read. Picture perfect read, Gary. I know you are. I've said it before, and you know, I'll say it one more time. Gary, if I had to read as much as you have to read with all of those checklists and all of those conditions and all of those different things, it would destroy my brain. If I had to look at all those charts, it would destroy my brain. I love simplicity, man. I'm not going to say you have to embrace it because you don't. But simplicity removes the burden of overthinking from me. John says, my really big chart has a termination condition. My large chart has a 50-50, and my small chart has divergence. John says, let's see how many things I can get against this trade before I try to take it. Notice that he doesn't have an order waiting. Pretty cool, right? 50-50 on the one-to-ones, 50-50 on the divergence high, 50-50 on resistance all the way down here. So John says, to hell with the lessons, I'm going to fight the small triggers anyway. Because he had an HVA line. It's funny. Even John Novak loses his patience sometimes. But look at this. He gets a confirmation bar. It comes right from an HVA line, right? So he's weighing out the options. The triggers are strong. That's the best momentum look we could have. There's one divergence coming from the small triggers outside, right? John ignores the reversal bar from the outer band, the white bar that follows it, the HVA that prints against it, and says, I'll take this order right here at the HVA line, right at the area inside of favorable large triggers. And it comes up. Did it print a lower divergence right there? Is that NASDAQ? Well, I'll be darned. It did, didn't it? It did print a lower divergence. And guys, John Novak's a master at managing trades. 50-50 with divergence. Fights the strong, small triggers. Can't break through. That was right at a pink HVA line. John Novak knew that HVA line was there. Guys, when you learn to read your charts, you'll take calculated risks. And you'll manage them aggressively. And look at his arrow. Look where it's pointing. Right to that point where he knows things can go sour on him. And they did. But if you chose not to fight the small triggers, it keeps you out of the trade. And you don't have to worry about it. Pretty cool. Guys, we made it through all of your pictures. So how do we feel about it? Rakesh, did you get your NASDAQ stops and targets set up okay? I hope so. Nubian man, I hope you got my response yesterday. Great job trading with the direction, with everything. Love to see those entries to see how you did it. Lil Saigon, how are we feeling? Then stick to the crude. So, guys, NASDAQ is not for brand new users. S&P flows better. Crude oil flows better, right? 50-50, one divergence, strong triggers, area inside. Easy peasy, right? First trouble spot. Take some money. Crude oil. Odds favorable, right? Smalls below the larger wide. They're angled in the direction of the trend. If I get a reversal bar, can't I identify my area of resistance inside of favorable large triggers? Guys, this is what we call a pre-trade picture. Am I on the wrong one? Ooh, I am. I didn't upload this one. I fixed my other one. So I'm going to cancel that because there's no volume on this one, guys. Contracts roll. Thank you, Paul. I don't ever trade it. Yeah. So I'm going to update this to 9. Thank you for that. I don't trade crude oil on my classroom charts, guys. I have different charts for class and for my own personal trading. But here we go. Odds favorable, clear path. Everything says down. Paul, did you get in at 19, 18? Right at the area, inside of favorable large triggers. Oh, there should be a rule about this, guys. And everything says down, and if you got in at 18, you already took your $100. You're already break even, and you're looking for that. It's not on my chart, is it, Alex? Show me your chart. My large chart doesn't appear to have the synthetics on it. So it's 50-50. So if one divergence with strong triggers, you chose not to take it. Alex, do your rules say don't take it with divergence? Did you take it anyway? Good job. Pretty awesome, right? John Novak says buy and sell everything and manage it, right? So Alex, one day what you may find is that when that market rolls and everything says down and the momentum is this strong and the smalls are this far outside of the large, and like John Novak said, those one-to-ones print right on top of that fib, you might be willing to take and manage, right? You might be willing to get in here. Your plan may grow. And then you'll take profits down here at the first trouble spot. You'll get to break even and you'll see what happens. Everything is an evolution, guys. Make money simple. Make money easy. Make money without having to overthink. And then when you're consistent with simplicity, your plan can expand if you feel like it needs to. The old Pineski, right? If divergence is true, Paul says there may be a pullback that takes out the previous pivot. But Paul, that also gives you 2 divergences on a 50-50. What does your plan say about that? Yep, guys, my chart's probably been adjusted out of sorts a couple times. I don't have any idea what template I have on this one, so let me reload a template and we'll see what happened. All right, 10K, how do you manage when the price is coming back to get your SL stop loss? or hovers around the entry. That kills me a lot. Sometimes you walk away, your price doesn't hit your stop loss, and it makes it to the target without you. Then you're frustrated and you start making mistakes. 10K, you want the real answer? You want the honest, I'm not even going to sugarcoat it answer? You don't trust. You don't trust your large chart. You don't trust that the advantage of momentum, that the advantage of a clear path, that the advantage of everything supporting continuation in the direction of the trade is true. And you don't trust it so much that you let tiny little fluctuations on a smaller chart scare the shit out of you. Does that sound about right? Yep. So 10K, here's the other side of it. Are you ready to feel better? Let me tell you why, and it sucks that you don't trust it yet, but it's because you're trying to make money and you're not trying to embrace the process. You're not remembering what creates the money. So what happens is in the beginning, you do this a lot. You take those great entries, right? But you're so afraid of losing money that you get caught up on these little fluctuations. When the reality is when everything says down, when everything says go, when everything is clear, and let's use this one for an example. Odds favorable, haven't reached the area, coming from a termination. 10K, I want you to remember this phrase. If you get in at the midband, what changed, right? Here we go. 10K, there's my entry. And I'm in the market. Are you with me so far? And this is the look. This is the look on my 13-2. It's amazing, isn't it? Termination, full reversal, odds favorable. Everything says giddy up to the upside, and I haven't reached the area. And I take the entry, and I put my stop where the market shouldn't go, right? And I'm in the trade, and there's nothing for me to do. And then I get a reversal bar, and now I have virtually no risk. In 10K, you're pretty good at up to this point, right? You get in, you wait for the reversal bar, you move your stop, you're comfortable. The 13-2 told you to do it, right? Your small chart didn't tell you to get in. Your 13-2 said look for an entry on the small chart. Does that make sense? Your 13-2 leads the way. I'm going to get t-shirts and coffee mugs made with that. The 13-2 said I had odds favorable momentum. The 13-2 said the path was clear. So watch this. So I'm in and my risk is reduced, right? And here's my next bar. What changed? Did the 13-2 change? No. Did the 5-1 change? No. The conditions are still exactly the same. And there's my next bar. And what 10K? This is the one that people fail to realize. What changed? Can you identify something that changed on the small chart? Now my small triggers are in the direction of the trade too, right? Holy crap, every trigger is up. The area is held, the reversal bar is in place, the path is clear, the momentum is the best. The only thing that's changed is that it got better. And then it goes up and it gets better. And it gets better and it gets better and it gets better and it keeps getting better. Right to Fibonacci resistance. All that momentum, everything says up straight to resistance, right? Would you be okay getting in at 01 and only making 19 ticks up to resistance on a 2 lot? That's a $380 trade, right? Isn't that amazing? But I know that you like bigger moves, right? So what do the trigger lines say when we get there? They're still strong. Everything still says up. So let's see. What changed? Nothing. Ever. At all. It's still going. And then 10K, this is your first fluctuation on a small chart. And you're watching those ticks, right? You're watching one or two ticks turn against you when the momentum is up on the large chart. You're watching one or two ticks come against you when the path is clear on the large chart. And you're letting this small chart, this refinement tool, this entry chart, Jedi mind blast you with a couple tiny little fluctuations. 10K, when I first started, I would take 25 trades in a day. And I would be up 22 ticks because I would let fluctuations in the small chart scare the hell out of me. Large chart says down, large chart says momentum, large chart says go, right? Look at all of these little fluctuations that happen. It goes up, it comes down, it goes up, it comes down. You see this because it's a refinement chart. But the reality is that the resistance inside of favorable large triggers with all these advantages, that was only the entry. The small chart was used for it. These little fluctuations mean absolutely nothing. And that's what you're going to have to work through. So 10K, I don't know if you're sim or you're live right now. And it's none of my business. You certainly don't have to tell me. There's the first entry. Paul, there's your pivot stop out right at resistance with everything going. Okay, so let's ask yourself this, 10K. If you're live, but you're scared to death to make pragmatic decisions, why? Why do you have so many accounts if you're scared to manage a trade, right? And I'm not knocking you. Do whatever you want to do. It has no concern on my day. So why not try this? Your entries are great. Your reads are great. Everything is great, right? Why not try this management plan? Not on the NASDAQ. Try it on your crude oil. Try it on your S&P. Why not keep it super pragmatic and pull your gut out of the equation? Do it on market replay. Go back and replay 2 or 3 days. Or even better, 10K, do you take pictures of all the trades you take? Or are you beyond that because you're live now? So there we go. So you're not even studying. You're just hoping to get better by doing, right? I don't give trading advice. But I will do this. Are you ready? And guys, this is for everybody. I don't give trading advice. But if you post every trade you take in class, you have a visual reminder of what you're doing. And then if you were following this plan and you had every trade that you've taken, you could go back, right? 10K, you could go back and you could look at every one of these and you could say, man, I jumped out too soon. Here's a still picture of it. What could I have done better? And then you and I are going to have a conversation about everything you do, and we're going to talk about what you can do better. So what you're not doing right now is you're not using the resources at hand. So let's just change that. It's not a negative, right? It is what it is. Who cares? It is. It's done. Rear view mirror. But moving forward, post your trades in class, and let's start working on management together, because sometimes you just need to hear somebody say, dude, you had every advantage in place. Stick with it. I haven't quit on anybody yet. I have no intention of doing it. Not a signal after you entered. It was a little scary. 8-tick stop, right? Paul, you took the pivot stop out at resistance with tons of momentum. The triggers were still strong. Nice trade. And you managed it assertively, Paul. Beautiful work. Gary, you take the first entry. It's perfect. And I don't know why you jumped ship. So what changed? Price got to the right side of the smalls. What changed? The smalls started to roll. The bars were down. The triggers were down. The momentum was the same. Everything got better. So that was just first profits? Perfect. Everything just got better. Nice job. And that's all we can do, guys. Take a picture, talk about it, move forward. Take a picture, talk about it, move forward. Joel, you got in after the second divergence, right? You're not using your 50-50 checklist because then you wouldn't be able to take the trade. And you exit on third divergence. Nicely done, Joel. Nice management. Hey, 10K, you're great, dude. And you have my time every day. So work with me every day. Let's see you in this class for the next week, and let's work on management. And I'm telling you guys, there's nobody that can't be fixed with a little conversation. There's no challenge that you're having that can't be overcome if I know what you're doing and you give me the opportunity to help. That's why this classroom is so effective. Because of the conversation, because of the pictures, because of the interaction, right? NASDAQ being silly. Jose, there's those flat triggers again, right? And Jose, there's those flat triggers and a full bar away. Did you stay out? Where are you taking it from? Divergence, divergence, divergence. Okay, manage your trade. Scary. All right, guys, that's it for me today. Great job, everybody. Thank you. If I confused you a little bit with the NASDAQ stuff, guys, I apologize for that. I hope that I was able to help you guys out with the NASDAQ stuff a little bit. You guys that are trading it, it is a different animal, right? It doesn't flow the same way that crude and the S&P do. I don't tell you what to trade, but I feel like learning your patterns, learning to read your charts on the S&P, learning to read your charts on crude oil. It's smoother, it flows nicer. And until you're really confident with what you're looking for, it's going to create more opportunities for success and less confusion. Throwing that out there. I hope everybody has an amazing day. I hope you trade well this afternoon. If you do market replay, please feel free to bring your pictures back tomorrow. If you're not posting pictures, but you're not making money, guys, you are shooting yourself in the foot. If you're brand new and you're shy about posting pictures, just do it. You'll see how painless it can be. You're very welcome, guys. You're so welcome. I get excited when you do well. I get excited when you win. I get excited when you follow rules. It's ridiculous. I talk to my wife about breakthroughs in the classroom. I really do. I get excited about it. So keep doing it. Guys, I'll be back tomorrow morning at 9 a.m. You have 2 more days with me, and then you get 5 days with my big brother. And he's going to break you, and then I'll fix you when I come back. But it'll be awesome. Just kidding. He's going to keep you focused on the best of the best, too. And he's going to help you on your management. And guys, I will see you tomorrow morning. Enjoy your afternoon. Thank you, everybody. Be good.